Welcome back, financial forecasters. Today, wait a minute, something feels weird. One sec. Much better. Welcome back to the Financial Forecaster, guys. Today we're just going to go over investing. Why is it so scary to so many people? How to get started, and you're probably already invested in the stock market and you don't even know it. So if you're ready, Financial Forecaster, guys, let's go. Why you're not investing, the basics of investing, and honestly where to get started. Bare bones, let's go. I know a lot of you out there have been asking me, Ryan, I have never invested. Why haven't I invested yet? Where do I start? Isn't investing dangerous? Well, I'll answer some few candid questions today, and here we go, Financial Forecaster, just getting started, honestly, let's go. All right, first, what is investing? Honestly, investing is, in the purest form, you're putting your money somewhere so it can grow. You want it to beat inflation so your money doesn't lose purchasing power over the years. What does it mean? Well, you all know that things over time go up in price. So every $100 you have every year, as things get more expensive, that $100 can buy less things. That's it. That's inflation when it comes to just you like us. Inflation has many macroeconomic, real world applications that don't involve us whatsoever, unless we're bigwigs running a business, have something to do. But if you're just like a you and me, Joe Schmo kind of guy, inflation just means our money can buy less over the years. And we all know that. So that's why we invest, so that our money kind of grows and beats it. Hopefully it beats it more than inflation. But what are we going to do? The best we can do is hope that our money beats inflation. So that's it. Why we're investing. You want to make your money grow. Savings accounts suck. Absolutely suck. I go up to these people all the time and they say, hey Ryan, I'm like, are you investing? And they're like, yeah, I've got a whole bunch of money in my savings account. That doesn't mean diddly squat. Look at me. Look at me. I am the investor now. You want to take control of your money. If you don't, then the whole world's going to be laughing at you. And once you get 10, 20 years down the road, you're going to wish you began to do it sooner, especially if you're in your early 20s, guys. Guys, time is your friend. Please make use of it. Okay, so the stock market. Scary. Big, scary things. Now, I know most of you watching this in Canada already either have a TFSA or an RRSP. And you're like, well, I just put money into my RSP every month. I just put money into my TFSA. Isn't that enough? Well, you're already investing. The problem is you're letting the banks do it for you. And they're putting your money in your TFSA and in your RSP, they're buying mutual funds. They're buying their own mutual funds. The bank is making money off you. Banks are not these godly, heavenly things that are there to help you make money. Banks are there to make a profit. And they're making a profit off the money you put in their bank, okay? So use banks, don't let banks use you. I've had many experiences where I tell a friend, go open a self-directed RRSP, go open a self-directed TFSA. They come back to me and they said, Ryan, they made me sign up for a mutual fund. They said, what I want was too risky. Again, the banks are trying to screw you out of money. They want to make money off of you. They don't want you to use them as a service so you can make your own money. So you're already in a TFSA, you're already in an RSP. If you're in the States, you have a 401k, you have your IRA Roth, you have what have you, your investment vehicle. The only thing you really need to do, if you're a beginner, honestly, beginning is so easy. Just take control of it. Download Robinhood, download Wealthsimple, start investing yourself. You can have as many TFSAs as you want, as many RRSPs as you want, as long as you stay under your contribution limit, which you can easily find out based on your age. Just do some research on the net. Don't go over your contributions limits and start doing it yourself. Now, where do you get started? Now that's the big one. Where do I invest my money? Okay, you ready? Basic investors, broad market, ETF, index funds. Easy. Every month, put in that. It's the exact same thing as going to the bank and buying a mutual fund. It is a basket of a whole bunch of securities or stocks, possibly even some bonds if you want to get into bonds, but let's just go with stocks for now because it's easier. Buy a NASDAQ ETF, buy a broad market S&P ETF, Just do your research. Literally type in that in, broad market ETF, index fund. Most popular index fund, top 10 index funds. They're safe, they make you more money because banks will take what they earn, what you earn off your money, banks are taking a cut of that and they're making the money themselves, okay? This way you're putting your money in the exact same things, probably even safer because it's not an actively managed account. Passive index funds outperform managed funds every time. So that's it. First thing, index funds. Okay, so you're feeling a little frisky. You made your first move. Now what do you do with your second? You want to buy some like individual stocks. You want to try to beat the market. Okay, invest in what you know. McDonald's. Unless you think McDonald's is going anywhere in the next 10 years, it's a safe bet. Coca-Cola, Johnson & Johnson, Kroger. You're looking at Hydro One. You're looking for companies that will just be here, just work. A lot of people are like, Ryan, why do you like utilities so much? Because if there is a recession coming up, if times get hard for the entire world, which every doom and naysayer is saying, what are you gonna do? You're gonna pay your mortgage and you're gonna pay your utilities bill, your energy bill. So I love my utilities because they're very safe, and if there's intense market volatility, and volatility is when stocks go up and down at whipsaw speeds, utilities will be the least volatile thing in your portfolio. They've been the least volatile thing in the last 2 years. They pay a steady dividend. And again, a dividend is where the company, they pretty much reward you for holding their shares with their own profit. So you get the banks paying you money back. You get utilities paying you money back. If you pay Hydro One for your energy, but you invest in Hydro One is paying you back with people's energy bills. If you're a TD Bank customer and you're paying fees to have your bank account open, but you're investing in TD, TD is paying you back their profits in forms of dividends to you. Okay, so that's it. You got your index funds. That's where you start. Look up the top 10 index funds, broad market index funds. Easy. Next, do the staples. Banks, big ones. Don't try to find this small, because you think that the price looks cheap and you're trying to outplay the market. Don't try to find some bank that you've never heard of. Just go with the ones you use, the big ones. In Canada, it's TD, and RBC, Bank of Nova Scotia. In America, it's Goldman Sachs, JP Morgan, Bank of America. Now, I'm a big fan of Canadian banks over American banks, but it's kind of hard to go wrong either way, especially with interest rates about to tick up. These banks are set to make a lot more money. If you're worried about something like 2008, now maybe you're watching this and you're too young, that doesn't really mean anything to you, but I don't think there's going to be a housing crisis like 2008. And I could be dead wrong, but I think there's too much regulations and there's too much capital float for all these banks to do that again. And it's been too soon, honestly. They might try that another couple decades down the road. But as of right now, banks, great place to put your money. It's a bank. Unless the world goes to doomsday, you're not going to lose your money. Third, don't buy penny stocks. Guys, I cannot believe the amount of investors I talk to, beginning investors, that they start their portfolio with something crazy and small and cheap. Do not do that. Please do not do that. Either you'll sour your experience, you'll lose a ton of money and just be disincentivized from going any further. Start with staples, strong, great companies. And you know when it's a strong, great company. It's not that hard to figure out. Nike, Costco, Apple, Facebook, the biggins. That's what you want. Don't think you're smarter than everybody else. You're not. The smartest people on Wall Street, the smartest people in the world, lose money because they try to think that they're smarter. So just think you're dumb. Invest in everything else that's huge and big, and you know that's going to be around for the next 10, 20 years, and that's where you start. Okay, you ready? The very last thing about investing. Start as soon as you can. Do it consistently. Don't worry about it if it's going up or down. It's all a long game. You're not going to lose money in the long game as long as you're doing it safe. Please invest. All rich people in the world invest. I can almost say that as a guaranteed fact. Every single rich person in the world invests. And that's why the people without money think it's so scary. because they've been told that the stock market is this terrifying, mystifying thing. It's not taught to you in schools because they want to keep you down. They want to make sure that you're not playing in the same arena as they are, and they're going to reap all the benefits. As a man who loves capitalism myself, I know its inherent flaws, and I know its daggers and its teeth. Capitalism is flawed and skewed heavily to people who have money. So they try to screw the people without money. Please, this is my whole message behind Financial Forecaster and Getting Rich Together, because I don't want to see people get left behind. I don't want to see people screwed out of their money and their future. I want everyone to be able to use this device that rich people have created to make money and play in the game with them and get ahead in a way that society won't let us do. So that's it. That's my just beginner guide. Open up simple. Open up a Robinhood. Broad market ETFs, something safe. If you're going for individual stocks, buy big things like banks and utilities and telecommunications like TELUS, Rogers, and Bell. Just make sure that you're doing it, that you know what's going on with your money. And guys, we can get richer than we are now. You can secure your future, feel better about your life, and everything, honestly, will start to get better for you. Please, I'm not a financial advisor, but I'm someone who is deeply concerned about friends and family who are reaching retirement age or getting into jobs without pensions. If you're not taking this into your account now, then 10 years down the road, you're going to have squandered an opportunity that you'll never be able to get back. Please, Financial Forecaster, Getting Rich Together, this is for you guys. Start caring about your money, start caring about your future, and let's get rich together. Let's go.